Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NORTHWESTERN Energy Group INC quarterly report. Northwestern Energy offers a range of businesses and services including electricity generation, purchase, transmission and distribution, natural gas production, purchase, storage, transmission, and distribution, municipal franchises for natural gas service in communities, electric transmission and distribution infrastructure maintenance, 6,596 miles of electric transmission lines and 18,794 miles of electric distribution lines, natural gas transmission and distribution infrastructure maintenance, 2,133 miles of natural gas transmission lines, and 5,221 miles of natural gas distribution lines, service to residential, commercial and industrial customers operations in Montana, South Dakota, Nebraska, and Yellowstone National Park. The stock price of Northwestern Energy Group Inc. (NWE) has experienced a significant increase over the past year, with a 20% total shareholder return. Several key factors have contributed to this surge. Northwestern Energy's strong financial performance and earnings guidance have been major drivers. The company reported better-than-expected third-quarter earnings for 2025, exceeding analyst expectations for revenue and earnings per share. This positive performance was attributed to an expanding customer base and increased energy usage. Additionally, the company is well-positioned to benefit from growing demand from data centers in Montana and South Dakota, which is expected to support above-trend revenue and earnings growth. The pending merger with Black Hills Corporation, valued at $3.6 billion, will further broaden Northwestern's market reach and enhance customer and geographic diversification. These factors, combined with successful acquisition integrations, increased ownership in the Colstrip facility, and a long-term investment plan, have contributed to the company's robust stock price growth over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by an increase in electric revenues, up 11% from $306,478,000 to $339,751,000, and gas revenues, up 22% from $38,683,000 to $47,201,000. Additionally, the acquisition of Energy West operations for $35.9 million in cash is expected to contribute to revenue growth. On the other hand, revenue decline is primarily driven by higher operating expenses, including merger-related costs and depreciation, as well as increased Montana property tax tracker collections and interest expense. Net income and profit margins. A mixed picture. The company's net income experienced a mixed trend between 2024 and 2025. Initially, it decreased from $143.6 million to $136.4 million. However, this decline was offset by an increase of $78.2 million due to various utility margin items. Unfortunately, this gain was short-lived, as the net income then dropped by $7.2 million. Profit margins also showed a contradictory trend. On one hand, utility margin non-GAAP increased significantly by 11.8% from $801.3 million to $895.9 million. This upward movement was echoed in the overall utility margin, which rose by 11.1%. Nevertheless, profit margins as a whole decreased due to higher operating expenses, interest expense, and lower other income. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash flow of $338.3 million, the company demonstrates its capacity to produce sufficient funds to cover its expenses and invest in growth initiatives. This positive trend is further reinforced by the management's strategy of utilizing internal operating cash flows to manage its finances and fund capital investments, thereby ensuring a stable and sustainable financial position. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, long-term debt has seen a substantial increase from $2,695,343 to $9,480,842, representing a growth of 251%. This is largely due to the issuance of $400 million Montana first mortgage bonds and an amended term loan that increased commitment to $150 million. The current portion of long-term debt decreased, but this was offset by the increase in long-term debt. Interest expenses have also seen a notable rise, increasing by 17.3%, $108,163 versus $92,562, and 19.6%, $10.5 million. This significant growth is evident across various reports, including a 13.6% increase in interest expenses on page 22. The company's interest expense as a percentage of total revenue has also increased. These changes indicate that the company's debt level and interest expenses have undergone substantial increases over the past year. Management is expressing cautious optimism about the company's outlook. In the short term, they are concerned about supply chain constraints, inflation, and adverse economic conditions, which may incur additional costs related to the merger with Black Hills Corporation. However, in the long term, they aim to achieve net zero carbon emissions by 2050 and serve up to 1,100 megawatts of energy by 2030. The company plans to invest in critical infrastructure to provide reliable and affordable energy while maintaining a 50-55% debt to total capital ratio. They also target a long-term dividend payout ratio of 60-70%. Management is prioritizing balancing additional capital needs with debt capacity and equity issuances to maintain investment-grade ratings. Overall, the company's strategy focuses on navigating short-term challenges while positioning itself for long-term growth and sustainability. The company has a history of paying dividends to its shareholders. In fact, it has been consistently paying dividends over the years, with figures increasing from $118.9 million in 2024 to $121 million in 2025. This indicates that the company is committed to returning value to its investors through dividend payments. That concludes the financial summary for NORTHWESTERN Energy Group INC. Feel free to comment below, and I will be happy to answer them when possible.